So the next one here is working on work your family trust. Now, what we mean by that is if you're trading through a family trust, or maybe your family trust owns shares in the company that runs your business, we want to make sure you're using that to your absolute potential. Now, a couple of things to remember with trusts is that they can distribute, and I'm talking about discretionary or sometimes called family trust, they can distribute the money that they make, their profit, to people in the family group, and you can change who that gets allocated to each year, which is a pretty cool feature there. So we want to make sure we're distributing it to the people who make the most sense from a tax perspective, or any other perspective that we want to consider. So most family trusts or discretionary trusts can distribute to obviously the business owners themselves, the spouse, the kids, but there's limitations to that. Basically any of the sort of more immediate family members. So even like parents, sometimes grandparents, or brothers and sisters of the business owners, in-laws. There are certain limitations, and you do have to read your trust deed to make sure who you can distribute your money to. So make sure you double check that. And also you've got to document who is getting this profit before 30 June of every single financial year. So you actually have to have a trust distribution minute. That's something that we do as part of our clients' tax planning process. Once we've had that discussion with them of who's the most appropriate beneficiary, we actually document that for them and get them to sign that off. Now, the other thing about family trusts and making sure you get the most out of them is with the more recent trust deeds, we can actually distribute different streams of income. And what that means, that's a bit of an accounting term, but what that means is if your trust earns multiple different types of income, maybe it gets business income along with interest on term deposits or bank accounts, even though that's not too high at the moment, and it might get dividends, we can actually send those different forms of income, even capital gains as another example, to different beneficiaries. And that also might make sense, or have a better outcome on our tax position. So again, we want to make sure your trust deed is up to date, and we can update that if needed to bring it into sort of the more recent rules around trust distribution streaming. But also we need to have a look at that for who can actually receive the money, and that's called the beneficiaries. So yeah, just an encouragement, if you've got a family trust in your structure, your business structure, make sure you're using it to its absolute potential in your family situation.